All right. Hey there. Finally on here. Sorry about technical issues here this morning, guys. Christopher Franks with Texas West Capital coming at you live from just north of Houston, Texas on Lake Conroe. It is Friday, October 6, 2023, and we're going to talk about the jobs report today. Big surprise to the upside. But again, if you've been watching and following us, then, what's happening was expected, especially if you look at like the S&P. It was already expected to be where it is. So, hey, all right. Not only that, but we've got Fibo here as well, and he's got his charts coming in. So hopefully you guys are ready on that. You guys ready to do this? I see you there. I see Data, Da Vinci, Sats McGee, you guys showing up already. Everybody listening in. Again, I do apologize having for a little issue there on the technical side of it. I restarted like 3 times to get this running right. But let's see here. Mr. Fiboswanny's in here. What's going on, man? Oh, no, we can't hear you.
Oh, I take it back. It was my bad. I just wanted to throw out a little loop there, right? Doing great, man. How are you?
Hey, I love it when things work out. Back at the A-Team back in the day in the 80s, that great, wonderful show with Mr. T and Hannibal. And, he said, I love it when a plan comes together. And, no surprises really on price action today, especially when we're looking at the S&P. So we're going to take a look at that here. I know you've got a chart, and we'll take a look at my chart as well.
Sure.
Data wants to know if we're lip reading today. Well, it depends on how good you can do that, right? What's going on, Brian? I see you there with Zobia Dollars as well. I think I might be getting a bit of an echo here. Lord have mercy. It's, guys, it's always something, it seems like, right? Anyway, so I guess we'll go ahead and jump in there. I know Fibo's got to leave a little bit early today, so why don't we go ahead and jump in there, man? What chart you got on here first?
Yeah, let's jump in.
Whoops. Whoa, what happened? Did we just lose him? Oh, Lord have mercy. This has been an interesting start to the show here, guys. Okay, so while Fibo tries to get back on here, we talk about payrolls here, guys. 336,000, well over the 100 and I think it was like 170 was expected. So man, oh man. But the couple of times we've had these big surprises, the upside, they've like the next month when the new one comes out, they roll back how large the increase was, usually significantly. So I wouldn't be surprised to see them pull this back quite a bit at the next one there. Man, I do not know what happened to Fibo here. Let me see if I can get a hold of him real quick. The biggest, let's say this real good. The big thing though, I think, is the average hourly jobs. Yeah, Sats McGee says I'm hearing most of those are part-time jobs. Is that true? So if we look at it, the average hourly earnings were, I think they were down. I think, right? Let me look over here real quick. Get back on my results here. Let's see. Oh man, see it when my computer went out there, I had to change. It just locked everything else out. Let me see here. Get all my information back up here so I'm not lying to you, even inadvertently. Let's see. Oh, I wonder where Fibo is. Let me just send him a message real quick. Let him know to join back in there. Yeah, so unemployment rate was it went up, right? So it was 3.8% 2 months ago. 2 months previous. The last time was 3.7, and now it's up to 3.8 again. Yeah, average hourly earnings down 2%, right? Or I mean 0.2%, right? Let me see here. Yeah, so even though there's supposedly all these jobs, the average hourly earnings down, right? And so if you're the Fed, right, this is what you're looking at. I mean, yeah, you look at the jobs, but you're really focusing. I've talked to you guys about this before, on the actual, your year over year wage growth or decline, right? That's what you're looking at on that weekly. It's just, so if that thing's going down, again, that's what the Fed's looking for when they're trying to get things down, because what it means is you have less money generally to spend, right? If we're looking at that, okay, guys, sorry, Fibo's power went out for a minute, so we'll get him on here in just 1 minute. He's getting back on, get loaded up. So at least it wasn't my fault, right? Let me see here. So unemployment rate, again, 3.8 versus 3.7 expected, back up to the 3.8. Leisure and hospitality. So Sat, you were asking about that. Yeah, leisure and hospitality led job growth. So beyond that, then it was government, and then it was healthcare, right? So that's kind of where the jobs came in. And so you had this big hit at the beginning. Everything kind of dropped, right? And then it's like all been erased. Now, last week, if you guys were with us last week, we talked about how the dollar was looking like it may have topped or maybe about to top. And I think it went up just a little bit further, but basically was topped out. Fib will get on here and show you DXY chart. I think he had that target area on there, something we had discussed previously. So we've got that as well. But yeah, I mean, that the year over year, I gotta say this way, right? Year over year average hourly earnings, okay, have continued to go down. So back in like March or April, I looked probably about March of 2022, it was up there around 6%, and it's down to 4.2% now. So again, when your wages are coming down, that's what the Fed wants to see, because that says, hey, listen, I don't have as much money to spend. So even though job is up, and then we look at where is it up? Well, it makes a difference where it's up, right? Jobs up in leisure and hospitality, right? Usually kind of seasonal kind of jobs as well. Usually don't pay as much. So yeah, it makes a big difference on where that's coming at. And again, overall unemployment rally, but man, still 3.8%. That's one thing I hadn't expected for stay so low for so long, but it has. I don't know that it's necessarily something's going to stick around with that, but we'll see. The market is, I think they're like up to a 46% chance of a rate hike at the next session. We've been talking about this. We were going to get the one rate hike in the summer, beginning of summer, and then potentially one more in Q4. So here we are, potentially going to do what we were already looking to do. Nothing should be surprising, you guys. If you've been watching, none of this should be surprising to you. Basically the same things we've been talking about for quite a while here. But I got Fibo back on here.
Yay!
Hey, there he is.
I think everybody's trying to suppress us or something.
They don't want the real information out there.
Yeah, I guess. It's like when it rains, it pours, even though it's sunny outside right now. And I don't know why the power flickered, but it
just flipped, right?
Went off for like a minute.
All right, man. Well, while you're back here, let's go ahead and jump you back on there.
Yeah. No, I heard you talking about the
down here so we can see the charts.
Jobs.
What do you got here? Bitcoin?
Yeah. Starting out on Bitcoin here. You can see my screen, right?
Yeah.
All right. Cool. I got a couple time frames on BTC, and there's a monthly chart that I wanted to kind of show too, kind of an interesting, just timing and those kind of things, kind of a macro look. But starting with the 4 hour, really just kind of going with the flow here. We had this previous threshold, which is the red Fibonacci level when we were in the bear zone here, and the market, went into the bull zone. So you bought. It was it was a small trade, but the buy from here to the 200%. At 27,559 was a small trade, but then after it hit this 200%, you have to go back into history a little bit to find out where my next targets are, and then the next target was up here and it hit, and then the next one is the 200%, which is at 29,016. So that's my being long at the moment. My next target is just around 29K for that next target on the Fib extension. If it makes that 200%, then I got to go back in history to find the next levels. So when I go back here, this is a key level back in this area here that matches up closely with that 200%. So that Fib extension level that I have comes from the next level above. So everything is, going as planned, even though we had the correction back lower here, back below the shallow Fib. So you'd be buying back in. being underwater a little bit, but we stayed in the bull zone. Momentum's not super strong, but it still has an edge to the bulls here on the 4-hour. So everything's still looking pretty decent when it comes to maintaining that bullish structure. And as you can see, we had the nice little candle, the last 4 hours came right back up. Yeah, kind of trading a little bit of the volatility. But I kind of mentioned it a little bit earlier this morning with that jobs report. This has a little bit to do with the stocks, but I thought stock, at first stocks were getting killed. I'm looking down at the chart over here, but stocks were getting killed, and everyone was thinking that rates would soar due to that hot economy based on that job report. But I was looking at private payrolls, and they're non-seasonally adjusted. They're actually down 400K. So really, to me, all the opposite's happening. So I thought we would get, so once people kind of realize that, I thought maybe we get a little bit of a head chopper rally. And we're starting to get that a little bit on the S&P, starting to jump back up. BTC started to jump back up. But again, like, to me, I really don't follow that news. But if it was news that was strong enough, it would have pushed us into this bear zone, and I would have got out, and then we would have had to go back to the drawing board. But so far, all that news that's been happening this morning with all that volatility, I still maintain my structure. Everything's still on target. Everything's still bullish on the 4-hour. So everything's looking pretty good there. Moving over to the daily here. Daily, went into the bull zone. We've bought. We're waiting for that first target. I got a couple other targets up here. That first target's at the previous threshold. So any buys down in here, that first will be a sell. And then we got some fib extension target out here. I got this trend line break objective that's thrown in there also, in case you need some other targets. And then the 200%
what levels are
above
those that you're looking at, the targets?
Yeah, on the daily here, the first target comes in at 29.2. It's 29.230. I got an order in, just underneath that. The next fib extension is between the 127 and 141 is between 30.4 and 31. I looked back at some other. I have this line drawn in here, but I looked at other time frames, and the 3,800 is the level for that next one. The trend line objective is at 31.8. And then the next fib extension beyond that is at 33.5. So those are the levels I'm looking at on the way up. So I'm hoping that what works really well is if you hit the target, take your profit, comes back to the shallow fib, you rebuy, go back up to the next one, and just kind of stair step it up into profit. So that's what I'm looking at the moment. But right now, everything looking pretty decent, staying in the bull zone here. And I do like. And the reason I'm long on these, and I'm not too concerned just yet, is when you go over to the weekly here is still, maintaining that support at the trend line here, and also the 61.8% level at 24/7. I came down there and tested, but the last few weeks we've been kind of riding this, bullish trend line to the upside. A little bit of buying interest on dips in the market, maintain the bullish zone. Momentum is not great, but give it some time. This is a long-term chart, so it takes a week to get new data. So you got to wait for it to see how it's working. But right now everything's kind of structured really well on that. And what made me think of this being, kind of holding here and working to the upside, that's when I jumped to the monthly, and I was looking at a bunch of different. There's a lot of shit on here, but the main thing what I was looking at was just the timing of all this stuff, that even from a macro look, and you look at, just start with the timing of the lows. You start the low here, and then you had the low that hits right here, and then you go again, and then the low hits right here, and then so a projection of a low would be out in October of 26 when it comes to that macro look. So you got these timings, but the interesting thing to me is, when you look at the halving here, and these dotted lines, these vertical lines, these are the halvings. When the halving hit, once that hit and you go back 17 bars, that's when the low happened. And the halving is set to be in April of this year, or in 2024. And if you go back 17 bars, that low already hit. So everything's looking really good on a timing perspective. And then I look at it from, okay, let's go to the highs. So I look at the timing of the highs. So you have the high here, and then the high here is, scheduled to be October of 25. But that could be, who knows where that could be on projections.
Yeah.
I got it somewhere around 190,000 or something crazy like that. But when you look at this, but what I was looking at was the timing of the high to when the low happened, and you had this 12 bars here, and then the low to or the high to the low here was also 12 bars.
Yeah.
So I'm looking at this and like, okay, this is just kind of weird. And then you take this, then you look at this trend line. And then the trend line broke, and then you work your way to the upside, and it hit the target on this trend line. And this is the kind of trend line that I'm looking at right here on the weekly. Is go in this direction to hold us on this move to the upside. So this broke, hit the target. It actually took 4 weeks, 1, 2, 3, and then the fourth week was a breakout. If you look at the low here, it was 1, 2, 3, and then that fourth week was a breakout.
Yep.
So the measurement of this one takes us up to that 50K or so. That's the one we've been waiting for.
Yep.
And we've worked to our upside here, and it came down and it's held at 38.2%, which is, to me, very bullish that it's holding that level of Fibonacci retracement. Back here, I don't have the fibs on there, but let me put them on there real quick. If you're looking at it from this one, the 38.2% level was pretty quick. It went down to the 61.8% level, but it went down really quickly 1 month and came back up.
Yeah.
But it had a full retracement to the breakout right here, which is fine. But this time around, that's not happening. It's still holding that bullish structure. Right. So for me, I'm still thinking that 50K is a possibility, in the next couple of months, maybe into the new year. But again, you're not going to get another one is the pink looking fibs here. So what I did was I did a trend extension and just take this leg right here from the halving to the high, and then you come down to this point and you get the 61.8% level at this 15K or so.
Yep. And
if you draw this line out, that's where it kind of came back down to. So what I'm looking at is if this comes up to where the 61.8% is off this trend, off of the halving to the high, and work your way down, the 61.8% is in that 50K area that we'd like to see, which is the trend line break. This one was pretty close here on the trend line break. And then this one kind of matches up pretty close too. That would be like, if we get up to that point, we break out to new highs, because the new high doesn't happen until post halving. So, which is, based on the halving the high we saw here, it was post halving. So most likely we're not going to see a new high above 69 until post halving. But if we do that, then this level at the 50K is going to become really, really strong support, just like the 15K did here. Yep. So I'm just looking at a bunch of timing, and to me, I like having that. Looking at this, not that it's going to work perfectly, but the structure and the timing and everything of the highs and lows and the fib levels and everything's holding really well. I like to see that structure. So to me, as long as that long-term macro structure is maintaining, then to me, the buying interest should remain along this line as we work our way to that trend line break objective, which is in that 50K area, as we move forward. Now, of course, if this weekly breaks down, then yeah, we might want to start looking at short positions and those kind of things. But until then, I'm going to stay long, and on my daily being long, I'm going to stay long. Look at those targets, take some profit when we get back up to that point. And also on the 4 hour, you got we're still in the bullish zone there. So bull zone, bull zone, bull zone, bull zone. To me, we're not in a bearish market. And a lot of people kind of talk about, well, we're going lower, we're going to 10K. I don't understand all of that. I don't know where they get those numbers from. So because when you look at support and resistance on this stuff, it's holding structure. So as long as it's holding structure, I'm playing the game. So that's where I'm at. I'm just kind of I'm talking fast because I got to leave at 1, but that's where I'm at on BTC. So any questions?
No, man, I agree. I like your targets. I've got you said a 31, I think you said 31.2.
On the daily?
Or 31.4, I think is what you said. Yeah, you said 31 something, yeah.
31.8 is the trend line objective. Yeah.
That's right, that's right. I've got
and that matches up with the previous high, which is kind of interesting. So
yeah, I've got
so
a
when you look at that
7 target on that, so right up there with you.
Yep.
That area. Let me just throw up this chart here real quick.
Yeah, the other targets for me were just take profit areas, buy dips, take profit areas. But the main move is that 31.8 to the previous high.
Yeah.
In this move to the upside.
Yeah, and so nothing's actually changed for me on my, this is my macro from the low over here, reaccumulation going on. I had I've posted this here, and I posted it when we had this attempted breakout here. As you can see, it says attempted breakout. We did get the breakout on volume up into that daily R1 pivot, pulled back to this previous resistance as support. We've tagged it a few times, and we're trying to rally it up. We got this small local range right here. We're trying to cross bullishly here on Stochastic RSI on the daily. It's bullish, and then of course RSI itself bounced off the SMA there. And I do hear that I've got a little bit of echo on there, guys. So I apologize for that. I'll try and fix it in a minute here. But we did break out above this last lower high. We had this bearish market structure right here. We did peak out above that. So this bearish market structure is now broken on here, looking up. So yeah, let me jump in there and see if I can fix that echo there. I don't know if that'll help any, but we'll see. Real quick question, Ross Mark, what's going on, man? He says, why is
just so you know, I don't hear your echo, so the audience might not hear it.
Oh, okay. Well, that'll be good then. On any given asset, why is it so difficult for the instrument to make a higher high or higher low? Oh, he says he can hear it. Seems like people try to trade
bummer.
SFPs.
Oh, I can hear it now. Sorry.
Yeah, it's just the nature of that sideways movement. When you look at this here, it's just a bunch of overlap. So until you're actually breaking, we've got 6+ months of sideways here, guys. A lot of overlap. So it's not going to be a simple, breakout higher. You've got to go through each of these areas. You can see there's a lot of interest by the markets. So, that's the easy kind of answer there. I don't know why this stupid thing is echoing on me. It says, it's always something, guys. Let me try it again now. Back. I think let me see if I can fix something over here. All right, is that that's still echoing there, guys? Or let me know if that echoing stopped there.
I can let me talk and see if I don't hear it when I talk. So I think you're good.
Nobody wants to tell me. I don't know. Is it stopped? Is it done? It's worse? What the heck? Lord have mercy. All right, guys. Not really sure what to do about it. I don't understand why it's happening. It's just a crazy thing. Okay. We're gonna I'm gonna mute here, and I'm gonna let Fibo talk about his next chart over there.
Yeah, I can just go through. Some of my charts here. I had what I had open this morning, and we can look at others if we need to later. But on Ethereum, on the daily here, we went into the bull zone, bought up rather high. We've been working our way down here, kind of getting a throwback to the trend line, staying in the bull zone. So I'm maintaining this position for now. If we do go into the bear zone, then of course I'll get out, take a little bit of a loss. But right now it's holding the way it should. So nothing really crazy on the Ethereum side. If this does end up holding, the first target is 1874 on that buy that we had earlier, and then the next target above that will be 1976. Moving over to I had a couple other charts. The SPY, the daily on the SPY there. I traded it a couple times already. I haven't had a new position right now. I've been kind of holding out for the downside here. I was looking for kind of a falling out of bed here, back down to the previous threshold back here at 40.78 before I do anything, or I buy a new bull zone when a new structure hits. But we did get a little bit of a rally so far today. We're tapping into that shallow fib area, which is an area of resistance right around 43.43. So if you actually were playing the short side on this in the bear zone, you would want to be selling it here with downside targets toward that 40.78. I am not playing that side. I'm only playing the long side for now. Just waiting for a nice dip in the market or a new bull zone to get a new bullish structure in play on the daily here. But right now we're still bearish on that. On gold, I had a target in here just inside this Fibonacci extension between 1788 and 1818. I had an order in at 1813.40 because that's where that target was I'd like to see. Didn't get down there yet. A couple of ways I would approach this is with the RSI being in the bear zone. I was looking for an area to buy while we're going down, and that was that first level for me to get back into the gold market. Or if this ends up closing, since it dipped all the way down outside the bearish zone and is coming back up, if this actually closes the day back in the bear zone, that could be that's also a buy indication for me, because you don't typically get that kind of move. And when it gets back up into the bear zone, kind of jump on it. Maybe the trend will start taking us back to the upside. But being in the bear zone, if I do end up buying it and just say it closed right now, we'd be back up into the bear zone. I'd buy it right here at 1844 or so. And then the target would be the shallow fib at 1884, because it's still in the bear zone and you still want to take profit at the shallow fib as resistance to work your way down toward downside targets again. Unfortunately, I didn't get hit this morning, or I'd be in the market and maybe put in some break-even stops or anything like that that is needed. But right at the moment, didn't get filled. But I'm going to keep an eye on that bearish zone or that market coming back into the bearish zone. And of course, if it gets really rallying and it gets back into another bull zone, I'll be adding to those positions if that happens. And then the DXY, Chris was talking about this earlier. That target nailed really well. I was pretty happy with it on the daily here going into the bull zone. That target was at 107.17 for me at that 200%. It got up there, wicked up a little bit, and started to fall. So to me, it was a good target to sell. And then the shallow fib is at 105.24. I'd be looking to buy that area on a dip for a possibility of moving back to the upside. But we'll have to kind of see as this comes down to this shallow fib area. Is it going to move down into that bear zone? So we'll have to kind of keep our eyes on that. But I do like the way the targets hit really nicely, because if you look at it, we got into the zone, worked our way up, hit the 100% pretty easily, went up to this area, hit the target on the fib extension right in here. It actually tagged the bottom of it, went down, and then came back up, and then went above it, and then came back down and hit it as support at the bottom of the fib extension area, and then started to work your way to the upside, worked its way nicely all the way back up to the 200%. So it's doing exactly what it should, and that's what I like to see when it comes to the starting the threshold where I like to start it in the bull zone, hitting the fib extensions exactly the way you want them. And these fib extensions are not from highs and lows. They're from the psychology areas I'm trying to maintain on that psychology change of the mindset of people. And that's what I'm trying to measure. And when that happens, it's mind-boggling to me. It's a phenomenon that I've been doing this for so long. I don't know how to explain, but it's just there. And you just got to rely on that human nature to do exactly what they do. And that's what's happening. So those are the charts I had up. If we have anything else to look at, just let me know. But that's what I have. Up to you. Do you have anything, Chris, or do you still have an echo?
Well, we're going to try this. There's suggestions to mute you while I'm talking. So we'll see if this works, and they'll have to let me know if I'm still echoing out there for them. So I've got you on mute at the moment, and we'll see how this works. I'm going to jump on here real quick. It's gone. Okay. So I guess Fibo, when you're done talking, just hit mute, or I'll mute you or something, and then we should be good. So real quick here, my gold chart. I've got I've got a wave 1 up here and a wave 2 just beyond the 50% here. We got a triangle for wave B, or it may be a WXY. Either way, it's a 3-wave decline off this here. And we're finding support, right around on the larger time frame, the weekly, we'd be right around the weekly pivot. We're bouncing right here on the daily S1 pivot, which is usually what we look for when we move in sideways between the pivot and the S1. We look for a move to the S1. And then what we're looking for now is impulsive breakout above that daily pivot, and then taking out this triangle resistance here at 1968.90. If we can do that, we're going to go to a new all-time high. I've got a target of 27.93 and 70 cents for wave 3. So if we can continue to get this rally up out of here, again, wave 2 pulls back into wave 4 of a lesser degree. It's what we look for. Well oversold, bottomed out there, Stochh RSI. And then RSI itself, well down here, like around 20, hasn't even broken back out yet. We're getting a nice rally on that.
What level was your S1 pivot, by the way? I'll mute back in, but I was just curious.
Yeah, S1 pivot is, let me see, right here around, what is that, 1826 or so is where we were at for that, on that. Yeah, Echo came back with Fib muted. He needed to speak. You guys need to listen when he speaks. Yeah, so I mean, for me, I think there's a good chance this may be done here. If we do drop lower, I'm looking at 61.8, which is 17.96 and 70 cents, and the 70.5, which is 17.56 and 10 cents. But again, this looks like a triangle here. We've got 3 waves up, down, through it, and it's a sharp drop, so a thrust out of the triangle, which is what we look for, and a really solid area that we would normally look for a reversal. So I'm thinking we're probably done here. But again, we want to see that impulsive breakout above the pivot itself around $1,900, 1903. And then especially above wave B triangle resistance at 1968.90. We can do that. I think you just hold till 27.93 and 70 cents at least. Minimum expected target on that. If I jump back over here to the DXY, again, basically just stopping short of a 50% retracement. I've got this as, again, a 1 with a flat here, A, B, and then C is 2. Looking for an impulsive breakdown below this ascending support, and really this daily pivot right around 105.42 or 3. If we can get impulsive breakdown through that, we should target 102.936. And I think if we're getting through that, we should get through that. Breaking down through the swing low here, all the way around 99.6, will get us then, headed down toward 94 and continuing on that way.
Hey, Chris, I actually really like that level that you have right there, because that's exactly, within pennies of where my shallow fib is. So if you get down below that level, that's the breakdown right there. So what you're looking at matches really well with that shallow fib that I'm looking at for a breakdown to the downside. And that's why, we hit the target to the upside, but then when you come back down, I don't know if I'm going to be buying that shallow fib, because it's going to go into the bear zone for me. And then that's when that breakdown will happen. So I like how it's matching up really well on both the upside and the downside targets, with 2 different ways of looking at it.
Yeah, man. And this, you guys, if you're paying attention, we're both basically working with fibs, right? We're just using a little bit different way. I'm using Elliott wave, and Fibo's using, his threshold theory. But again, this is, man, I'm telling you guys, if you don't learn how to use fibs, what are you even doing, right? Because the whole idea, like, again, Fibo and I, we come from this idea that social mood puts itself in the charts, right? By its buying and selling. And then that's kind of, so what your movement on the charts is actually this human emotion, right? This human psychology of going through it. And that's what the fibs are giving you, right? That's why they work so well, but only if you learn to use them properly. But you can use them in different ways, as you're seeing here, and still get the same general target areas. And so that's one of the most important things I think you guys can learn, is that, what's going on in the market. Even the big money managers, they don't look at it this way, right? They look at it as, okay, something happens in the chart and it makes people do things. But we're on the other side. We're on the back side of it. We're like, no, people do things. People are showing you how they feel by whether they're buying or selling stocks or crypto or whatever. People in the aggregate, the social mood, it's telling you, are they fearful or are they okay? And it's telling you by the way they're buying and selling. We couldn't have told you. Let me do this. Let me pull up this next chart here, guys. The S&P, right? If you guys have been watching me, we've been talking about this being a wave 4 in either the 38.2 or the 50% retracement. That's what we usually look for, right? This was well before the jobs report came out. I haven't said anything about jobs. Haven't any thoughts on jobs, right? We didn't know what the jobs were going to be here or what it was going to do, but look at what we're rallying off of. We're rallying right here off that, just above that 50% area, right? It's just above. Again, another kind of visual representation of psychology here are the pivots, right? Again, rallying off that S1 pivot, rallying up. I mean, here for the S&P, everybody's talking about, especially the last, week or so, been talking about how, it's going down, it's going down further. It's going to keep going down, but it's a 3-wave decline right now. And I'll tell you what, a bullish breakout here above the daily pivot at 43.90 and 3/4 or so, followed by a breakout above 45.66. That you should be looking higher at that point. You should absolutely be looking higher. And let me see if I have to change this here. Oh, yeah. So now, because we went down, this original target was based off the 38.2, but since we went down to 50, we've actually got a target of 48.96, right? That's 48.96 for wave 5 of 3. Now, what does that mean? Well, that means, again, based on human psychology, the way, human emotion, the way everything works out, right? We should get a wave 4 pullback down toward the same, 4,400, a little bit below it level. So you get this 3, you'll get that 4, and then you'll get a 5 on the larger move there. And of course, even that 3 right there, guys, is a new all-time high, right? Everybody and their grandmother's been swearing to you since we were down here that it was going to go further. It had to go down further. So, again, guys, is it the news that moves the market? Because if it is, how the freaking heck could Fibbo and I be figuring out where these things are going if it's the news that moves the markets? News is always temporary movements, but your overall trend is already established. I know it's a hard thing it was a hard thing for me at first as I started considering when I was trading for a while. Before it would kind of hit me, and I was fighting against it because, everybody always tells you, the charts happen and whatever happens on the chart makes people do things. And sure, a few people are reactionary off those charts, but in general, the mood of the social mood itself is what's actually driving the charts. And if you can step over yourself on that and really accept that, it changes your entire view of the markets and what's going on. And all of a sudden, you're not worried about what the news is. You don't care because, again, it's already in there, right? We're already making moves. It's hitting targets that we've already had established. We had these 2 targets down here established back over here. Where was this swing high? Back over here in July. That was months ago. We've had multiple NFP releases and other economic data since then, right? Let me see here. Ross Mark's asking real quick here. Assuming you guys identify a level, stop loss is invalidation. Say it fails. It hits stop loss first time, but succeeds the second. Do you guys use stop market orders for a second attempt entry? If so, how many attempts is reasonable? It sounds like you're talking about revenge trading, like this idea that if it hits your target, it's just going to go down a little bit lower and then it's going to turn. So I'm going to get in again. If I'm understanding your question correctly, I don't do that. If it hits my stop loss, I'm done. I'm out. I wait for the price action to play a little bit more to give me more information, because your stop loss should just tell you that what you think is happening is not correct. That's what your stop loss should. It just happens to also save you money if you do it correctly, right? You limit your losses correctly. But the job of the stop loss is to make sure that you know when whatever you're thinking, whatever reasoning you have for doing what it's doing, if it doesn't do that, your stop loss tells you that, right? Ross Mark says, so Chris, for example, with Elliott wave on the Euro USD daily or 4-hour chart, I swear you can count 9 waves at least. What happens to the 5 maximum count in that case? It's an overextension. So, 5 waves, 1, 2, 3, 4, 5. If you're getting more, it's just like an overextension of like a wave 3 usually. So you'll be 1, 2, and then you'll be 1, 2, 3, 4, 5 is 3, 4, and then 5 going up there. So yeah, that's all it is. It's just when you get that continued movement up, it's just an overextended, usually third wave. So yeah.
Yeah, and I'm the same way, Chris, on stop losses. To me, that's what the term means. Stop, take your loss, and leave, and get back to the drawing board and get back into a different trade another time. I don't want to chase the market. I want the market to come to me based on the plan and the strategy that I have. So once the stop hits, I'm out. You just take your lickings and move on and learn from the loss. Like what could I have done differently? Those kind of things. Back test it. Maybe you set it at the wrong spot. Maybe reevaluate that. It's all about risk management and how much you want to take risks and those kind of things. But stop losses for me. I'm exactly the same way you are. If I hit it, I'm out. Move on.
Oh, gotta take a moment here to unmute myself. Yeah, no, exactly, guys. You see what we're talking about here? Because as a trader, you have to understand that losses are inevitable. They will happen. Period. End of sentence. You're not special enough that you can keep it from happening. Okay. None of us are. The greatest traders in history have lost money. And some of them lost great amounts, right? So, the biggest, I think the only guarantee in trading really is that I've heard some people say that cycles are going to happen. Okay. Yeah. So maybe cycles, but really it's this idea that as a trader, you're going to lose money at some point. And the newer a trader you are, less experienced, less you know about it, how to properly, trade and risk manage, whatever, the more money you're going to lose. So that's why risk management should always be the first thing you learn as a trader. I know it's different. Y'all come out here and you want to learn all these techniques and how to figure out where price is headed and where it's going to reverse and all this. But it doesn't mean a hill of beans if you don't know proper risk management. Because especially at first, if you don't know proper risk management, you're going to lose a lot and you won't have money left over by the time you finally start trying to figure it out. You're going to do this when you start out, right? So inevitably you're going to start up here and you're going to come down, and you want to be able to hold while you get sideways and you start going up. But you can only do that with proper risk management. So again, I think one of the biggest things traders struggle with is mindset. And so, again, it's all about, it's not about getting rich overnight. It's about understanding what you're actually doing and what the real trading is all about. You can see a lot of BS online, guys. Believe half or less of what you see, most of your influencers say. Most of them regurgitate. Most of your influencers, guys, I'm going to be honest with you. Influencing is something people can get paid really well with, all right? And so most of your influencers are just news regurgitators with really bad takes, okay? They don't have any real experience. They don't have any real understanding of macroeconomics and markets and stuff like that. And even those that have been doing a long time, again, I always go back to the whole idea of fundamentals. When you're doing fundamentals, you notice that anybody who trades on fundamentals are usually going to have a pretty bad track record. Most of the time, because it's extremely difficult. Again, you have to get the whole understanding correct. You have to get the result correct, and you have to get the result of that result correct. So you got to get correct multiple times.
Hey, Chris, fundamental modeling. If you're looking at fundamentals and you're trying to, measure, basically, fundamental analysis is measuring supply and demand in a market to find an equilibrium price. So in a financial market, that doesn't work because the supply and demand takes time and the data takes time to change. And what fundamental analysis has a void of is measuring momentum and measuring strength of trends. And that's where TA comes into play. And vice versa. Technical analysis can't measure an equilibrium price. It's not meant to be that. Markets are dynamic. Markets are buying and selling within different realms of support and resistance, and that's what we're measuring. And to me, if the fundamental analysis changes and the fundamentals change, that's great. But unless they change enough to break us out of a realm of what we're trading, then it doesn't matter to us. It really doesn't matter. And that's the mind. That's that mindset that you're talking about. Is a lot of people will try to attack financial markets with an economic mindset, and they get confused. To me, you want to put on a financial lens. Markets are dynamic. They're not. You're not there to find this equilibrium, fair value price. That's what economics is all about. That's not what buying and selling and emotion and fear and greed and everything else is measured. And fundamental analysis can't measure that. And that's what TA is there for, is to measure that. So I just thrown in my 2 cents, but
Yeah, no, man, I appreciate that. Again, guys, remember Fibo is his day job is actually he gets paid to trade for somebody else, right? No, we don't pay him to trade, but he has a big company he works with, and that's what he does. And so take it to heart what he's saying here, guys. This, if it works for him and what he does in his day job that he's done for 20 friggin' years, guess what? It probably works, right? It's probably the way you should be thinking.
but even then, it still stems back to having proper risk management, regardless if you're doing fundamental analysis or technical analysis or whatever analysis you want to do. Without the importance of risk management, it doesn't work. You need risk management first. TA is just a tool. Fundamentals is just a tool. The econometric models are just a tool. So you need the risk management plan, and you use these tools within that plan. So it all kind of stems back to risk management, regardless of how you want to attack a market. But we're here for TA, and because we're in the near-term markets and we're trying to measure trend strength and momentum and social mood and those kind of things, which fundamentals can't measure. They just can't measure that. So back to you.
Hey, we're doing really good news show here. Back to you. No, really, no. And it's exactly, I love that he said it, because it was exactly the point which I was going to bring up next, which is, Ned Davis said it best. He said, basically, to kind of paraphrase what he said is, we're in a game of losing, right? That this is our game, guys. You come in here thinking you're trading to make money. And Rossmark, this is kind of in response to your question here, which says, given the importance of risk management and people tell you they can make money with 33% strike rate, why don't we just flip a coin and roll a dice? Because, we are in a game. The game we play here as traders, as speculators, is a game of loss. Okay. He who loses best, he who loses the least is the better winner, right? Is the bigger winner. And that's contrary to when we come in to trading, right? And we come into trading first and we think, oh my gosh, well, let me see here. Let me kind of do this. Let me pull this up here so you can see us. But when you first come into trading, you're generally thinking about making money, right? It's always about the next target, right? It's how can I get to that target? And slowly you start learning about risk management. You start learning about stop losses, but you haven't really fully understood the idea of risk management. That is what this is, guys. That is what we are doing here, is risk management. We have trades. We have ideas of where we want to go, of targets of where we want price to go. We've got stop losses to save us, right, from ourselves. But at the end of the day, it's all risk management, period. That's what
and it comes back to that 33% strike rate, right? If you have a strategy that's in place, that 33% you should be making very large gains on trends and very small losses on stop losses. So even though you only hit it 33% of the time, those 33% that you're hitting are much larger gains than they are losses, even though you're only hitting it a third of the time. But I always look at it like, given that the Orioles will be playing tomorrow and Major League Baseball is kick ass right now. But if you think about that, Hall of Famers in baseball are 300 or 30% hitters, right? They're top notch at 30%. So if you look at it from a technical perspective and a TA perspective, 30% is pretty golden if it is properly managed in that 30%. You don't want 30%, every time you hit something, you're only making 1 or 2% and your losses are 10%, then your 33% is going to suck. But if you actually have a risk management program that takes into consideration those larger trends and take profit when your system tells you to, then you do it. And then that works out in the long run at the 33% rate. So it's better than rolling the dice if you have a strong program and strategy and you stick to that strategy and that policy. And that's what I work with clients all the time. Depending on what company I'm working with, they have some strategy. They want to save budget, or they want to do this, or they want to do that. So you have to apply those techniques to whatever their strategy is. And then that's what it kind of boils down to.
Yeah, no, I mean that's I mean that's exactly right. Again, you know, at the end of the day, you have to assume that you're going to lose. If you don't assume you're going to lose your trade, then you're not going to put the real effort into actually correctly identifying where your stop losses should be. And this is where systems come in, guys. Again, I know Fibo's got to go here in a minute, but as a trader, the greatest things that are going to benefit you outside of your mindset, risk management first and foremost. Second is you have to develop a system for trading, right? So whether you're doing, systems in trading include things like Elliott Wave, Wyckoff, even ITC as far as price action goes, or ICT, Inner Circle Trader, kind of stuff. These are the different ways to trade. These are systems on how you do it, right? The more systemized your approach, the more likely you can be profitable over time. If you're always, just focusing on the single trade you're in, you're likely going to have a lot of trouble ever getting any kind of traction going and getting any kind of consistent profitability. And guess what, folks? At the end of the day, it's not about that single trade. I don't care how much you made on it. It's about that equity curve. Does your equity curve do this? As long as your equity curve is doing this, you've got it figured out. If you're doing single trades, though, your equity, it's not going to be curved. It's going to do this thing, right? Probably do this, curve down more than anything else.
So. Yep, and that's where I was talking about the 33% of taking profit on the larger trends and taking smaller losses. And then that's that equity curve that you're talking about. If you do that over time and not focus on each single trade, it comes over time. I mean, that's just the way it kind of works. But
yeah. So
and actually, it is. I got to run. Sorry, but I had to cut it short today, unfortunately. But it was great having you or being on the show again. So I'll throw it over to you, Chris, and thank you very much.
Hey, Fibo, man, we appreciate you being on as always. We'll look forward to you coming back in a couple of weeks here. But yeah, guys, I mean, I think honestly the biggest issue we have as traders is when we first come into the market, and most don't ever figure it out, is our perception, right? First of all, we're not in the correct mindset when we come in. Most people come in thinking they're going to get rich overnight, or thinking, oh, I can just go out there and do it right away because I can put money in and I can open an account and I can trade, right? But the reality of it is, just like any other skill set you do, you have to learn, right? You have to spend time practicing. You have to learn correctly, and you have to spend time practicing correctly, right? Trading is no difference, guys, okay? So, when you first come in as a trader, the thing you need to look at, and if you've just come in, or if you're, even if you've been in a while, right, but you're not consistently profitable yet, you're still stuck in that beginner stage. Excuse me. And that's not meant as a detraction or anything. That's just meant as until you figure out and you're honest with yourself where you are, you can't figure out how to fix whatever you need to fix so you can get better, right? It's the same thing with anything else. All y'all out here, I'm sure you're good at something, right? And it didn't happen overnight. It took practice. And the more you practiced, the better you became, right? It's the same thing with trading. The worst thing a trader can do is come in and make a big win right off. That's that lotto effect. And they feel like, oh my God, I know what I'm doing, right? And then they go back in there, and every single one of them will lose more money than they ever won. Okay, they'll just consistently lose because they think they understand what they're doing, and they're not, right? So mindset, you have to understand how you're approaching the market to begin with. We work a lot on that in the mentorship program that I have. We work a lot on. Nobody else does that, guys, I haven't seen really anybody that does it. But everybody wants to teach you some little trick or some little thing to trade. We teach those as well. But especially in the mentor program, we really focus a lot on the psychology of it, because unless your mind is right, the everything else you're learning isn't going to really mean squat, And very few people can actually do it on their own. There are some that have. I didn't do it on my own. you know, I mean, I made the decision to change my mindset. I had to do that, but then I, had to get coaches and whatnot along the way to help me understand, to help me avoid a lot of the pitfalls, to help me understand where I was screwing up. I couldn't see it. I was in it, right? And see what I needed to change. And that's the things, that you kind of get. But people kind of come in and they think, oh, I don't need any help and I don't need to do anything. And they're trading by themselves. That's another big thing. Even if it's not a paid community, if you just have a community of people that you can bounce back and forth off of with ideas and discussions, and especially when you talk about some challenges you're having mentally, those things will help you out so much more than you guys ever actually realize. We seem to have this aversion to coaching, or especially, psychologists and stuff like that. But yet, performance coaches, oh, who needs a performance coach? Well, your highest paid performers out there in anything, in art, in, music, in, what do you call it? Sports, all that. I mean, they've all got performance coaches. Why? Because it works. So, the question is your mindset, are you still that retail trader that thinks, oh, I'm going to do it all on my own? And you may, but you have to understand the odds are significantly against you. I thought I could do it all on my own to begin with as well. So, there's these things you have to get through. And then once you get your mindset right, when you get your mindset right, it's all about risk management. And then it's all about systemizing your approach to trading. These are the secrets that very few people actually talk to you about, because everybody else out there just wants to sell you some trading thing that they swear is going to work for you. And you know what the sad thing is? A lot of times it actually does work, but because you've never fixed your mindset, you weren't able to consume that education properly. And I think that's probably one of the biggest problems that new traders have, or traders in general have, is they don't know how to properly consume education, trading education, because the mindset's all wrong. Again, that's, something that why, I talk about it through everything, but especially, we spend an hour every week on Fridays. Here about an hour and a half, we'll be doing it, with the mentor students, talking about the psychology side of it. So, and yeah, guys, I'm letting you know we do that. But at the end of the day, whether you come in and join us with that or not, I'm trying to help you understand the things that you need to overcome, the things you need to realize, the things you need to recognize to become the trader that you want to be. Because if you ignore these things I'm talking about, you won't get there. You just won't. It can't happen. All right. And these are the same things, guys, that you do, again, in anything, whether it's a sport or a musical instrument or an artistic style or business. These are all the same things. It's all the same concepts. So how you are in one part of your life affects how you will be in the other parts of your life as well. You won't be just one way in one part and then a different way in another part. You can't do that. Your mind doesn't work that way. Data says, I'll never forget feeling like He-Man buying XRP above $3. Yeah, it didn't work out too well, did it, buddy? And I've done that so many times with different things, 25 years ago. Oh my God, it was so bad. I have to laugh now because I can't get the money back ever. But you have to make a decision. Are you going to change the way you approach trading or not? And only you guys can make that decision, right? Only you can do that. Let me see here. Bentley, what's up? Says back testing until I found strategies that worked is what helped me. Yeah, another part of it. Exactly. Yeah, especially if you're designing your own kind of system, which you will do, guys. Most of the traders out there, they develop, like Fibo developed his idea of how he trades. Most traders that become successful end up developing their own system, right? And so, like, I'll come out here and I'll talk about fibs. I'll talk about Elliott wave. I'll talk about Wyckoff. I'll talk about price action. I'll talk about pivots, right? And volume price action. But out of everything, volume price action is like the bread and butter of what I do. But I have found a style for me that combines all these things, right? I've found that, again, the way that Elliott wave works with pivots, the way Elliott wave corrections work with Wyckoff. And for me, it's all second nature. It all comes out to give me a better understanding of what's going on, right? But you can do that, right? You can pick one. I know some people that pick like just Elliott wave, but they have a way of doing it that resonates with them, right? They get a little extra that they do with it. a little extra something they add to it that creates their system that works for them. And you will. That's what will happen with you guys over time. If you're on your way to becoming successful, right? That is what happens. You won't buy a system or you won't learn a system and stick with that exactly. You'll put your own imprint on it. And then, backtesting, like Bentley said here, backtesting is what you'll be doing as you're kind of massaging that system into something that really, really works for you. Right. So, be prepared for that. Right. Ross Mark says it's not just mindset, Chris. These markets simply cannot make their mind as to where they're going for months at a time. And yet it's all figure outable, right? I mean, big picture, I remain correct, right? Off the November lows, right? Actually, even off the June lows, right? Anybody that's been following me, I've basically described what's happened. We've gone longer sideways here now for the last 6 months than what I thought we would. But my idea of where we're headed and what we're doing is still on par. It's still where it needs to be. So, we can say, the markets don't know what they're doing, but we don't have, again, if that was the case, if it was as simple as that, as, the markets don't know what they're doing, so we can't figure it out, then how did I figure it out, right? How do I figure it out? That doesn't mean I'm going to be wrong from time. Sure, I'm going to be wrong. We're traders, guys. We're as human beings, we're infinitely fallible by design, right? So we're going to be wrong. Again, that's why risk management is so important. But, again, when we're jumping on this right here, right? Look at this chart, guys. Or better yet, let's do this right here, because I got a lot of hell on this one, right? So again, as we kind of came down and did this, right? I was looking at this being the top here, and then we didn't get any blow off or anything. And so as we were developing this, I said, but we didn't get a blow off here. So I think we're probably just going to, this is like a wave 4 and we'll head up, right? And then we get down here, and I'm saying ABC, and we're down here. And I'm saying, listen, here's the bottom. We're going up, right? And everybody's arguing with me the entire time. So, I mean, how do I figure that out if it's not able to be figured out, right? And I think that's the hardest point for people in general to accept, is that markets aren't random, that they're based off human emotion and what's going on with the social mood, right? Like I said, it took me, I started 95. It probably took me about 15 years, 13, 15 years, somewhere around there, right around the great financial crisis, 2010, right around that area, before I kind of actually end up confidently putting it all together and going, man, this is how things are working. And then, like I said, it was years later that I, came across the book. I was like, oh my gosh, what's this socioeconomic theory? And I'm like, holy crap, it's exactly what I've been looking at here, right? There's actually a name for it. So I thought I was special. I wasn't special. Guess what, guys? It is what it is, right? But if there's one thing I can help you guys with, it's to understand that markets are not efficient, and they are not, they're not random. Okay. They're not, because people aren't random. And we know this through psychological studies that have been done for decades. Right. And so it just shows itself up in the markets as well. Right. Ross Mark says, let's say you identify a bottom and trade it. The number of times over a week it gets retested is insane. Plus you have to account for swap fees too. Well, where's your stop loss? Does your stop loss make sense? If you're trying to trade, listen. If you're going, okay, well, here's the bottom here, right? Right. And you're saying get retested over and over, or I don't know where, but let's say it's right here, right? And you're looking at this bigger picture. Is your stop loss right the heck up the butt end right here? I mean, is it right just below it? Because that doesn't make any sense. You've got a longer term picture here, right? If you're talking about this as a bottom here, again, maybe you think this is a bottom here. Where's your stop loss? Is it right below it? Again, probably too close, right? Is it below this swing low over here? Probably a better swing low. If it is, guess what? It didn't go, at least on this chart here, right? So I think a lot of it's misplacement of stop losses, misplacement of risk management is what I think it is, right? If you're talking about being leveraged, I mean, again, if you're leveraged and you're holding a leveraged trade over a longer period of time, yeah, you're going to have to pay fees and whatnot on that, right? But that's on you. You know, if you get into a thing, just understanding where a bottom may be and trading it are two different things, right? Because there's the time component, and I don't ever work with time. I've learned a long time ago, the more you try and guess time in general as a trader in general, the more likely you're going to be wrong over and over again. And that's what traders come in. A lot of new traders come in and they inadvertently think, oh my God, how quickly can I make this? You know, like I'll say, okay, well, here's the trade, here's my target. Well, how long do you think it's going to take there? Well, however long it takes. Well, they want to know, listen, if I get in today, will it rally tomorrow and get to that target pretty quickly here so I don't have to worry about it coming back against me and shaking me out of, you know, my confidence out and freaking out about it, right? Rossmark says, I'm assuming my stop doesn't get a hit at all, just the waste of time. The charts do going nowhere. Well, again, it depends on your on your time frame, right? If you're looking at this, I mean, this one went up pretty quick here, right? If you're looking at this range here and saying, oh, you know, I went long here and it's taking forever to get back up here, I don't think you're being realistic about what you're looking at. This is a huge, this is 6 months of sideways. This right here is you know, what, 24 and some change up to, well, even up here at the top, 31 and some change. I mean, geez, oh freaking A, it's what, $8,000? So that's a third of you know, that's a third up to that low there, up to the 24,000 low. That's a third. I mean, so, you know, you shouldn't expect this to rally straight up and out overnight. It's going to take a while. I think a lot of what you're experiencing here, Ross Mark, I think what you're experiencing is a lot of impatience, right? And that may be, again, I don't know, that may be from having too big a position, too much leverage, right? Because here's the thing, if you're using, let's say you're using proper risk management, right? And let's say you're adhering to the 1% rule. Well, guess what? You can take, with the 1% rule, you could literally take 100 trades at one time. So if one position takes a while to break out and go, it's not a big deal. You got other positions you can take along the way. You got other charts you can trade, right? It only becomes an issue if you're putting too much of your capital at risk at one trade. You have a too large position and or too much leverage. That's the only time it matters. But if you adhere to proper risk management, then it's not a big deal. Okay, one trade doesn't go. Okay, fine. Well, it takes a while to get there. That's fine. You've got other trades that you can take, right? Yeah, Ross Mark. And again, it's not me like, I don't think you believe I am, but I want to make sure people are clear. I'm not deriding you or anything, right? I'm just bringing out the likelihood of what the probability, you know, what the possibility of what's going on mentally and emotionally for you is what it is. Because again, you know, guys, if you don't know what the issue is, what you're having a challenge with, you can't possibly figure it out and move beyond it, right? We have to be realistic with ourselves. And a lot of people aren't, unfortunately, when it comes to trading, right? A lot of people, guys, listen, we lie to ourselves, right? We lie to ourselves, and just in life in general, we tend to say that we're much better than what we are at things, and things that we're doing poorly at, we tend to say, oh, it's not that bad, right? Because it's tough. It's tough to kind of accept that we may need help or that we may not be as good as we want to be, or as good as maybe we're telling others we are, right? But it becomes very detrimental as a trader when you do that, because that means you're going to lose money. You have to be honest with yourself. As a trader, and, you know, if you want to get, you know, profitable with trading, you know, you have to, again, it goes back to the mindset. You have to understand what the realities of trading are. And then you have to be honest with yourself about your challenges. Because again, unless you acknowledge that you're having them, and then you acknowledge what they are, unless you do that, you can't possibly, you know, fix them, right? And it's everybody. Nobody comes into trading perfectly fine, guys. Everybody has issues to deal with as traders. Okay, I want you guys to understand that. Everybody that comes into trading has whatever their issues are that are holding them back or that are hindering their success. And a lot of them are the same. Again, for me, I've told you guys, I've been very open with you guys. Everything you guys have done, I've been impatient, too large position sizing, too much leverage. You know, again, lying to myself, moving stop losses, improper risk management, no risk management at all. all these things, right? I've been through it all, guys. I've lost a lot of money because of it. So, please don't think I'm just saying these things just to say them. I'm saying these things because I've been there, I've done that. And I still have to deal with them today. You never become perfectly, perfect. We're human beings. Sometimes we fall into bad habits over again, and you got to be willing to be honest with yourself and recognize where you are and work on that. Yeah, because otherwise, you can't possibly fix it. And if you can't fix it, you can't get any better. Yeah. So yeah, just that's the biggest thing, and it's tough. It is tough, guys. Guys, a lot of what I talk about here mentally, emotionally, is tough for people. I'm not going to lie to you. It is tough. I would like to say probably, especially in Western society, because we have our own set of emotional stuff that we go through, growing up and our parents in society and stuff like that. The different type of expectations and whatnot that they have, and what the media gives us and what advertising and marketing gives us. So it's definitely tough, but it can be overcome. It can be fixed, right? Yeah. Manta Ray. Oh, Manta Ray. What's up, man? He says, I used to put Post-its on my monitor that said, "Are you tired and are you revenging?" I love that, man. I love that. Ross Mark says, I'm not tired, I'm bored. Yeah. And being bored is one of the worst things you can do as a trader, right? Because it's exactly like you're saying there, Ross Mark, man. When you're bored, it's tough. It's like it like kills you, right? And for people, especially that tend more toward ADHD or something like that as well. I'm not saying you do. I'm just saying for people that do, sitting still or not doing something becomes multitudes of time more difficult. So the boring part of trading becomes that much more difficult, right? But I went through a thing the other day with our traders here, our price action trading session on Wednesday, right? And we zoomed in on the 15-minute chart for Bitcoin, and I showed them how to trade that, right? And over the course of basically just over a day, I don't remember how many trades there were. One of you guys are in here, you can probably tell, but I think it was like something like, I don't even remember, 5 or 8 trades or something, all profitable. That could have been made in a time frame. So again, it's a time frame as well. But again, you have to do your risk management properly on it, right? Yeah, Ross Mark, yeah, you're finding it there, right? Says, I'm my biggest enemy. My brother made more money trading my crypto TA advice than I ever did. It's another great point, guys. I'm going to get out of here in a minute, but I love that Ross Mark's talking because there's so much stuff that we all feel, right? We've been through this, right? And not just in trading, but in life, we give out advice that's actually good advice, right? To our friends and family and strangers on the internet, right? But we don't actually take that same advice, right? We are our own worst enemies. And I love that you say that because, again, guys, everybody comes in and they want to blame, stock, the Wall Street or, or crypto whales are stealing their money, right, in the markets. But at the end of the day, we are our own worst enemy. Trading is simple. It's not easy. It's not easy because we have to deal with our own emotion and our own psychology that's going on with us. So, yeah. So why is it despite the revamp and rebranding of the channel, we're only getting 30 packs in here? I don't know what packs means. I appreciate that, Mace. You're clearly best in the industry to me. A lot of my issue has been I put my head down and I was doing everything for our members. Like anybody that's in there knows I spend, 12, 16 hours a day working. And I've been doing that for the last 7 years with our members. And the longer it's gotten in, I've been doing more, the longer it's getting in there. I haven't really focused on marketing a whole lot. Packs or persons. Yeah. I haven't really focused a whole lot on marketing. Generally I'll get at the end of the week or whatever, I'll have like 400 or 500 views on a video. But it's my fault. It's my fault. So if you guys are out there, follow, subscribe, leave a comment, hit the like button, stuff like that, wherever you're following at. But yeah, I just, I don't pander a lot. Like you guys might notice a lot of big, influencer accounts do. I don't pander to you. And a lot of people, they want to hear what they want to hear rather than what they need to hear. And I made a promise to you guys, 6-7 years ago when I started the live streaming. I guess it was probably about 6 years ago, beginning of 2018. I promised you guys I would never pander you. I'd never blow smoke up your ass, that I would always tell you not necessarily what you wanted to hear, but what you needed to hear. Because to me, that's the important thing. And most people out there aren't doing that. And you're getting sucked in to the nonsense because they tell you what you want to hear rather than what it is that you need to hear, so that you can actually be successful or have a chance at winning in trading. So I appreciate you guys for showing it, for showing up all the time, right? And those of you that continue to come back, again, I appreciate it. I really do. I'm going to work on marketing moving forward. Again, I recognize that I need to do that because it's not fair to our members. And it's not fair to y'all, whatever, that we're not getting a lot more, because you guys know I like to speak back and forth. I like to answer questions. I like to, discuss things that you guys want to discuss. So we're going to be working on that more. Okay. David says he liked it sub 6 or 7 years ago. Yeah, man, back in the day, right? Yeah, before I ever even put my face on there. But anyway, I appreciate you guys coming in as always. I really, truly hope that a lot of what I said resonates with you guys. And I promise if it doesn't, just keep coming back. At some point it should. You don't have to agree with me right now. That's okay. But if you're continuing to come back and you're not being a jerk, with really stupid comments order, right? But you're coming back and listening, then at least it means that you have a chance, not just in trading, but in life, right? Because it shows that you're open to hearing some different point of view that you may not necessarily agree with at that time. Doesn't mean you ever have to believe it or whatever, but having the mindset to actually listen and contemplate. Guys, I tell you, everything that I talk about in trading is transferable to the rest of your life. Okay? It absolutely is. And so the goal here is to not just get you all this, trading advice and whatnot, but is to help you live a better life. Because at the end of the day, that's what it's all about, even trading. Trading should get you time and it should get you money. Time and money. I thought I said the same thing twice. But yeah, that's what it should do. Because Lord knows everything else in life takes the two of those as much as you will give it, right? So, all right, guys. John, yeah, I'll check that out on Discord, buddy. I appreciate you guys so much. I hope you guys have an amazing weekend. You all trade safe. If you're in the mentor program, guys, remember, we'll be talking here in about an hour. And we'll talk about, of course, something else has to do with the emotions and psychology and how it affects your trading and how to deal with it. So there we go, guys. You can get in on our base level there for $11.99 a month. And I do that just to let you to come in inexpensively and go, okay, is this guy for real? Is he really legit? And you can try it out. And once you're in there, you can buy specific spaces that we have of different, charting or things we do or bundles, or you can come in for the whole banana, and that's at 50% off. You want the 50% off on the premium we have, which is actually our coaching level there. We do that. And I'm also have a mentor program, guys. So if you're interested in finding out more about that, you can send me a email at christopher.inks@texaswestcapital.com, or you can DM me on Twitter. All right. So there you go. There you go. I hope you guys have a great weekend. Trade safe. Remember, the only thing you control in the market is how much you lose. That's it. That's it. That's it. Okay. No matter what anybody else tells you, the only thing you control is how much you lose. So that makes risk management the absolute most important thing you're going to do day in and day out as a trader. All right. The rest of it is the candy corn on top. If you like candy corn, if not, it's the cherry on the top then. Okay. Have a great weekend, everybody. Take care.